Hey traders, welcome to Charts and Coffee. Hope everyone is having a great morning, caffeinating and getting ready to dominate this week. We're in the second half of March, which is just unbelievable to think about. We're winding down the first quarter of the year, and this is a great time to start asking yourself, where are your trades? Where are your account goals in terms of where you are now and where you want to be in terms of using an uptrend, right? So it's not just where are you in the tactics, but how are you tackling the current market we have? Or are you stuck in a loop of something bad could happen and I'm going to miss out? I talked a lot about this psychology yesterday in Top Tier Outlook last night. And I said, look, are we eventually going to pull back? Of course, right? Of course. At some point, the uptrend will be over. Nobody knows when that's going to be. So the higher probability thing would be when confronted with an escalator moving higher, just get on the escalator moving higher rather than trying to run down the escalator. Who's seen that before at the airport? You always see some poor schmo trying to do that. Just grab the other escalator. The bottom line, though, is if we don't grow our account as the very generous uptrend, and uptrends are the most generous, they have the most predictable psychology around them. It really doesn't take a lot for traders to want to buy. What do I mean by that? If we're short, or if someone's going to hit the sell button, right? Imagine a big sell button on your keyboard. We hit sell, oh my gosh, I'm making money. Hit sell, oh my gosh, I'm losing money. Some people might put on a net short, right? But there's a lot of different reasons. Buys are far more one-dimensional. It's a far simpler psychology to take advantage of. There aren't that many thoughts going through our head in terms of buy. We may have different criteria, but buy is just an easier button to smash for more people. So that's why I keep encouraging everybody to take advantage of it. Now, I think more so than my recommending that, proof is in the pudding. I had to look at the etymology of that. I always forget where that comes from. Proof is in the pudding. But walking the talk is a good one. We're long the NASDAQ this morning, right? We're already long from last week. We're long from exactly what we talk about. If you're a member of the Sector Secrets Mastery, you know exactly what we've done. Where the green meets the gray in an uptrend. Rinse and repeat, right? So that's what we're going to be doing this morning. Bot and I were chatting earlier saying, look, we're going to end up hitting the first target likely on the open. It's still 27 minutes away. Chickens and counting before hatching is a thing. But right now, for those of you that are in the mastery, remember, we've got those long QQQ positions. We're going to scale out, move to break even, and see what other goodness the NASDAQ has in store for us. All right. That being said, let's not fall into the trap of the market could pull back. Remember, it will. But in the meantime, it is our job to grow the account so that we can benefit from what's happening now, not staying flat because we fear of some potential happening at an unknown time in an unknown future, right? Okay, that said, let's convert it from, wow, very cool, Anthony. Hey, you're just getting started, and thank you so much for being with us the past month. Hopefully, you're starting to see that first day to the 30th day, how much different in terms of in understanding the market and the tactics you've got and the tools you've got. So great to have you. That is awesome. Thank you so much for putting in the effort. I don't know that I'd call it hard work because so much of it's automated now and we've got everything in place, but it is a lot of effort. So thank you for putting in that dedication and effort because it does pay dividends. That much I know. That much I know. All right. So thank you, Anthony. That's awesome. All right. And Matt asks, general macro question. Sure. How is the Bank of Japan hiking rates likely to affect the market? How is their hiking rates? I haven't, to be quite frank, I haven't thought much about it. Typically, so let's go back here. When is the next Bank of Japan meeting? And you might say, Rog, we haven't thought much about it. No. I got to figure out when the next meeting is. Yeah, they're going to hike on Tuesday. I'm trying to think what their next meeting is. All right. So typically what I'm going to have to go do is go take a look at the monetary policy statements. So here's the thing, Matt. What matters is not whether or not they're going to hike. Generally speaking, that's going to create a little disturbance in the force. That's going to create a little disturbance, probably mostly in treasuries. And then after that, I don't know how many traders are trying to take advantage of the carry right now. But to your point, the carry's been pretty abysmal. I don't know many traders that are looking at Australian dollar, Japanese yen, and the interest rate differential between the Reserve Bank of Australia and the Bank of Japan and really trying to take advantage of that. I don't see a ton of it. The overall trend has been up. So here's the thing. Macroeconomic wise, this is not new news, right? Whether it's going to happen or not, I don't know. So the reason I said I've got to go back and look at previous comments and the previous monetary statements to see just how much they've prepared the broader environment. See, this is not going to be Richard Jordan from the Swiss National Bank. For those of you that remember, when Richard Jordan had pegged the Swiss franc to the euro, everyone knew it was coming. They pegged, et cetera, right? What the undoing was Richard Jordan told nobody and no one. The Swiss National Bank clearly decided to wake up that morning and choose violence. And they unpegged the franc from the euro, causing some of the biggest moves that I had seen in, at that point, about 20 years of Forex trading that I've ever seen. So the reason I mention that is I don't think Bank of Japan is pulling a Richard Jordan here. We'd have to go back and see how prepared is the market. But here's the other thing too. If I can find that on Google, my feeling is if I can find that on Google, it's been discounted. So that's where I say whatever we're seeing on Aussie yen, dollar yen, whatever we're seeing on JGBs, whatever we're seeing on treasuries, probably already has built some of this in, and it should be a little bearish to the treasuries. It should be bullish to yields, just a little bit. And yeah, the carry is going to. But again, if I can Google and find it, expectations are they're going to hike, I got to go back and look at monetary policy. Yeah, I would say that. All right. Matt, thank you for the question. And again, truly, I have not given it that much thought. This is a big deal, though. I mean, obviously, this is a big deal because we haven't seen a rate hike from the Bank of Japan in, I don't know, almost 20 years. Yeah, because I'm trying to think I started trading Forex in late 99, early 2000. I don't think we've seen a hike since. Yeah. I'm trying to think back. But if we're generally seeing the yen moving lower against other currencies, again, probably not much there. So 17 years? Okay, thanks, Bot. Yeah, Bot says, yep, 17 years. All right, question is Tesla. So more so than trying to predict what's going to happen, the first thing we want to know is where it's going to land. But I think the thing that precedes that is to what degree has it been discounted? And I'm guessing it's been pretty well discounted based on the lack of freak out that I'm seeing on, say, dollar yen or Aussie yen. Can we take a look at Tesla? Pat, there it is. It's a trade that I would only take if I were bearish. It's a stock that continues to head lower. It's been bearish, frankly, for a long time. Most definitely taking that bearish turn early this year. And I've been recommending to any trader who asks me about Tesla, stick to the short side, unless your time frame and your time horizon are different. All right. Just out of curiosity, who's looking at Tesla in a way, not as a short-term trade, right? Let's talk about time frames for a moment. And I'll tell you, for those of you that want to really take some notes here, let me share some really important things with time frames with you. All right, if we're going to day trade Tesla, day trading means what? Today, right? Day trading means today. What can I do before the close, right? That's all day trading was. And by the way, day trading was the first kind of trading that existed when Wall Street was literally a big field next to a wall to keep the redcoats out. That's it. All right. So then we have daily time frames and 30-minute time frames and weekly time frames and monthly time frames and everything in between, right? Okay. So if I think about overall, what I want to do with Tesla, the first thing is, which way do I want to trade it, right? Which way do I want to trade it? Am I a bull or am I a bear? Because that's going to guide you to a very specific time frame. If you're a bear, right? So when we say let's look at Tesla, the prism with which we decide what we want to do is very much time frame, right? All right. So if I'm going to go with a daily time frame, that's the short side. If I'm going to go with the weekly time frame, that's the short side as well. So let's also be realistic, because I see a lot of this and it's beyond ludicrous to me. If our goal is to be traders, most traders I have found from 30 plus years of my own trading and also teaching for the better part of 2 decades, if not longer at this point, most traders have a time horizon of when they want to get in and when they want to get out of typically less than 2 weeks, right? Of typically less than 2 weeks. So if we want to get in, get out, pay ourselves, and rinse and repeat, and our time horizon, how long we anticipate to be in the trade, is typically less than 2 weeks. Now you need to, everyone here can say, hey, Rog, I'm a month, or I'm actually 3 days, or I'm actually more like a week. We all need to sit down and say, as a trader, what am I looking to do in terms of time horizon? Because that's going to dictate, in a lot of ways, time frame. What I find absolutely insane and ridiculous is from time to time, traders will say, hey, Rog, I'm a trader. Usually that's going to suggest a short-term time frame. And all of a sudden they're looking at weeklies and monthlies. Realize that that has nothing to do with nothing. If your time frame is less than 2 weeks, which I have found most traders' time frames are sometimes today. Does anyone here actually think that a monthly or weekly setup has anything to do with that short-term time frame? So keep that in mind. Now, in terms of the Tesla for longer term, if you have this in your mind, hey, Rog, I'd really like to build a position in Tesla longer term, look for a double bottom on the weekly, or wait for price to get back above the 200. I get so many Tesla questions. I thought this is a perfect time to break it down and talk about, hey, this is the way we need to think about time frames, and this is the way we need to think about the trends on those time frames as they relate to how long we anticipate, how much time we'll dedicate to that trade. All right, semiconductors. Semiconductors continue to be the strongest of the sectors, no question about it. What was interesting is last week, and I think I talked about this in Friday's video, there was a lot of open interest tractor beam action lower than where prices were. When we're in an OpEx, especially quarterly, right? That quarter triple witching, where we're going to OpEx, any of them would apply, but definitely the quarterly variety. And we see a lot of open interest below current price, it is going to tug down at it. And that was the concern about being long anytime before Friday. Now, Friday was the first time, if at all, I could have said, hey, forget the daily price movement range as an OpEx week, because there's so much liquidity south of where price was. So Friday would have been it. But instead of going with SMH, we decided, hey, what's an alternative way to go with this and not have a straight up dedication to semis for a bounce? We went more with a diluted, broader approach to QQQ. But Java, I'm long QQQ, which is to say I'm bullish SMH. There's no way that one can be without the other, really, not for longer term follow through. So while I don't have an SMH position, I'm absolutely bullish SMH. We just went with the QQQ. So I hope that makes sense. All right, next up is, let's see, how does CRM? So always think about where CRM, Eddie, exists in the tradosphere, and then ask yourself, of all the things that I could trade, do I want to trade a market that's still bullish? Granted, dominated by green grab candles, awesome, still above the wave, still above the 200, everything that I would want to see to say that this is a bullish stock is present, except for that pesky little trend. Now, we have done this before. We've done a quick little transition from an uptrend to chop, which just continues to remind everybody, do not presume reversal, presume continuation. Do not presume that every pullback is the beginning of a pronounced move lower, but rather it's just a quick move where if we buy the dip, we can take advantage of movement higher. So those are things that we need to keep in mind. Ultimately, if we're taking a look at where CRM is now, I'm bullish. Yeah, anytime the green meets the gray, that's straight up bullish. But what about when the yellow meets the gray? It's still a buy. So the question here is not whether or not CRM is buyable. It is. The question is, of all the stocks that are trading in similar groups, sectors, or the indices as CRM, is it the best one? Does it have the best structure? As far as EMR, I know little to nothing about EMR. What is EMR? Don't know what this is. But is it in an uptrend? Yes. So I would most definitely consider a dip buy, whether it's a mean reversion to the wave. This is what, Emerson? Am I thinking of the right stock? Yeah, here's the thing with EMR, PK. Nothing wrong with EMR. Don't get me wrong. It's been bullish since it got above the 200. It tested it almost at the end of January. It continues higher. No question about it. The reason I would not look at stock, it is good find. However, it's not weighted in anywhere with the broader markets. And one of the filters for me is I want to trade stocks that are heavily weighted in either the NASDAQ, the Dow, or the S&P, because the predictability and the follow through is far better when that stock is going to benefit from being in one of the high concentration weighted sectors or one of the high concentration weighted stocks. Otherwise, traders are sort of relegated to this needle in a haystack approach, which is let's find this one name that's doing its own thing. I'm not a fan typically of doing that, but granted, the structure is the structure, and that's a really good looking trend. Consistency in trading comes from consistency in the watch list. That is something that I come back to again and again throughout my trading. It's very difficult to wake up every morning and say, hey, what looks good today? Because let's say EMR is on my list now after this beautiful move, right? What if EMR was already something I looked at every single day and I just waited for EMR to get above the 200 and I just waited for those pullbacks? The only way you can do that is to have a steady watch list. So what I find a lot of traders end up doing, sadly, is they run a scanner or use a scanner, which I do not, and some stock comes up on a criteria. But I have found typically with most scanners, the move's already been made. The best type of scanning starts with a consistent watch list, and you scan those names. And still, that's going to give you, if you want to really go down the chain of all the different sectors and indices and weighting, you could have a watch list that's well over 40 or 50 symbols. Or you could have something a little bit more succinct, like I prefer, which is typically under 2 to 3 dozen. And once you've got that list of names that have a higher degree of probability to move with the broader averages and the high weighted sectors, for me, I find that's where the consistency in the number of trades I'm able to generate, the follow through in those trades, and the consistency of both those things, right? Because that's really what we're after. I know consistency doesn't sound like a sexy word, does it? But that's really what we're after. We want something to do. So that's where I say there's no consistency in expecting NVIDIA to go parabolic again. Right? It'll probably move again. I mean, it's a high concentration weighted stock. This is the kind of stock that we love to keep an eye on because it's heavily weighted in the NASDAQ. It's heavily weighted in the XLK. It's the number one stock in the SMH. It's kind of hard to miss when you're casting a net in the way that I'm suggesting, right? But to expect this kind of move throughout the year or even again, that's where traders get into trouble. Or worse, if someone looks back and no judgment here, but if someone looks back and says, hey, I grew my account, great, I was in SMCI. Awesome. Now what? There's 9 months ahead of us. Do we think SMCI is going to keep moving like this? Or are you putting yourself in the unenviable position to go have to find another SMCI that quadruples in price? Everyone knows that's not something that's probable, that's common, or heck, even easy to find. So that's why I go back to, there's a big difference between NVIDIA and SMCI, and NVIDIA would be the better place because it would be on that regular rotation of something that's on your radar. And that's something that you could take advantage of because you're continually keeping up with this name based on its weighting. Gang, that's the sector not so secret. That's the secret, right? When traders say, where's the consistency coming from? Where's the account growth coming from? That's where it's coming from. Be realistic about your time frames and time horizons, right? Let's not fool ourselves into thinking that as traders, we really care about what's going on a weekly or monthly. I find that disingenuous at best, right? Can you imagine if I pulled up a monthly chart of or a weekly chart of SMH and said, "Hey, look at what we could have done." Give me a break, right? So those are things that I say, knowing what most traders are doing, which is taking the market about 2-week chunks at a time, that would be half of a monthly candle. That would be 2 weekly candles. Who's making decisions like that? I'll tell you who. Nobody, right? So keep those things in mind. Let's stay on the path. Let's stay consistent. I'll see you tomorrow. Same time, same station, gang. Be good to each other.